Good morning. We're taking a look at the major currencies. You can see yesterday had a good day up, and today currently we're held by the 21-day moving average, which is coming in at 138.45. Now we need to get above this 138.53 area. You've got that line there, you've got that Fibonacci level coming in at the 50%. We need to get above there. We do have a bottom here, double bottom around here, which should help us move towards the top side. Obviously we saw Friday a lot of profit taking, so you know, the end of the month days we really take with a pinch of salt, because there is the natural wanting to cover your positions. So where do we go from here this week? I think there's a very good chance that we can go up towards this area here if we get above this. So I would be looking at 137, 139.76 to 139.85. That would be my thing for today. I do think sterling can go higher. We're showing no technical reason why that should occur. It's just for me, it's a didn't want to go down, it's got a double bottom, what can't go down goes up, that sort of thing. But obviously, you know, we take a look at the charts and what they tell you, but we also traders do use a bit of a gut instinct on this. So unless we go back down below 137.85, I am in the camp of buying into weakness in sterling. I've always had a bit of a love-hate relationship with sterling, more love than hate. So let's see how we go. Let's see whether or not we can clear that 138.38, 139.38 area. If we can, we're up and away. So now we'll take a look at Swissy. Again, look, held by the 200-day moving average. Dollar Swiss looks on its way up, as I pointed out to you last week. Dollar Swiss did come down to its 200-day moving average. You can see where it cuddled it. You can see where the market has been. Where am I looking on Dollar Swiss? I'm looking for it to go higher. I think it's got a very good chance of getting up towards the 91.73 area, where you've got that 50% fib, and you've also got the 21-day moving average. So where to buy? You've got the 200-day moving average down at 90.84. You've got the fib level down at 91.02. So anywhere within that area is where you want to be buying Dollar Swiss for this move higher. You can cover up to towards 191.73, but you would be going back into a long position if we broke above 191.78. Let's look at dollar CAD. Now, dollar CAD has been a bit of a pain, but again, I did explain, you know, what can't go up goes down, and we have been the right way round in dollar CAD. I think we're going to go up now, and the reason I am saying that is looking at the last 2 days action. So Friday and Monday, yesterday, there was no follow through at all in dollar CAD, and we're up today. So where do we want to go long of our little dollar CAD? Well, any level down to that level here of 122.65, I think would present a good buying opportunity. Look at the stochastics, they are under 10%. When you get a market that is under 10%, you need to go long. Now, especially when they're turning, and it's turning. So I would buy dollar CAD me personally at any area, and add to a good area when the market goes a little bit lower. You don't want to miss this one, which is why I'm banging on about it so much. I have been loath to buy dollar CAD. We've been selling it all the way through, but I'm loath to buy it until now. I think, first of all, you've got that 9-day moving average at 123.58. I think you've got a very good chance of going up 100 points to 124.13, maybe 124.64 before the end of the week. If we don't hold up and we do take out 122.5, the next level I've got is down around the 122.20 area. And if these stochastics are still looking a sack, that is where I will start to buy as well. Now we'll take a look at dollar yen. Sometimes I wished I didn't look at dollar yen, but I am looking at dollar yen. No divergence on the charts. The highs that were made over here back in March saw the stochastics up. We've made small high on yesterday at 109.69. As long as dollar yen stays above 108.68 to 108.65, I can't see any reason why the market shouldn't rally. So even though I'm not a great lover of dollar yen, I can see the potential. This is where you're looking at, all right, up here. If this doesn't break and these start to turn, you're out of any long position and either go into shorts or leave it alone. It doesn't matter what one you do, but you do not want to take an outright position unless market circumstances dictate. Now the Aussie doing nothing, absolutely nothing. It made its move, there it goes, it got out of this, it's now in this. You can pick the parameters of Aussie. You can see that this is going to prove a barrier up here at 90, what is it with me, the 90s? I think it's because I love the music. At 78.15, okay, that is where the top side of this is, 78.15. So unless we get above there, we are not going to make a move to the top side. But it's fine because look, these are your parameters of which you're trading. You're trading down to 76.88, you're trading up to this area here, 78.15. It's quite straightforward really, is the Aussie. Stay within that range unless that range changes. Now we've had a difference in the Kiwi. We have had a difference in the Kiwi. The Kiwi cross, the Aussie Kiwi cross is at 107.95. So that's sort of holding up in there, in the band that I'm liking it to. If we start to break down below 71.44 in the Kiwi, then it's going to have a bit of a problem. It's been different. We haven't ranged in the Kiwi. You can see that we did make that break. You can see that we've been going up. You can see we were overcooked. You can see we diverged. So there is a case for the Kiwi to go lower. You're going to know if we break. Let's give it a bit more room. 71.39. See if we do that. If we do, we're coming back down to here, which is 70.75, and here, which is 70.37. On the top side, you can see all your resistance up there at 72.64, and it really is only if we take out 72.86 where you're going to see buyers coming back in the market and they're going to be looking for up here, which is up at 73.27. Good luck. I'll catch you all later.